And here's the big news of the day. The SLV is now getting an absolute crap ton of silver in it. Why? People are going to safety. Remember, risk on. People don't believe in this market. They expect that we're going to have issues with the economy. They're listening to everybody say we're probably going to have a recession. They know that the Fed is tightening the monetary environment and the credit environment, so things are going to start to slow down the economy. That's done intentionally. And so what happens, people are going back in SLV. Now, the last time we saw a huge movement into SLV, it was 110 million ounces during Silver Squeeze. It was this lead up right here. Boom. This is Silver Squeeze. And then after Silver Squeeze, you saw the redemption out of SLV as people realized, well, SLV is not going to give me physical ounces, so I'm going to sell my SLV shares and go buy physical silver. And we saw that with silver deliveries. It seems to be repeating again as we have risk on. The retail sector is adding over the last 4 weeks 11.7 million ounces to SLV. They don't have redemptions, right? Only the authorized participants with 50,000 share baskets can do that. Authorized participants are basically the same as the bullion banks on COMEX. And so at the end of the day, what's going to happen is people are going to realize they can't actually get the silver. And I expect that demand to come out of SLV and go into physical, just like it did back here in 2021. But we'll monitor that for you guys. Are we going to have Silver Squeeze Part 2? I don't know. Early signs indicate people are going for the silver. We could see some sort of silver squeeze here in the first quarter. Will it be the same as what happened 2 years ago? We don't know. Although I find it uncanny. The timing is almost exact because the original silver squeeze was in January and February as well 2 years ago. And now January, February, we're doing it. Now, why does that happen? Because in January, a lot of money sitting on the sideline comes back into the market. So all markets. And so people are bidding up silver. So every year or 2 years, you could see this happen in the precious metal. You see a lot of money coming back in January. Will that actually lead to a squeeze? I don't know. There's not enough ounces over the last 4 weeks to matter. Last time it was 110 million ounces. This is only 11.6. So it's a much smaller movement, but it's still a huge movement into SLV. And what that tells me is people are going for the silver. Now, if you look at the iShares Silver Trust, SLV, the fund flows charts on etfdatabase.com, you can see on the 23rd, which would be the last month or Monday of this week, Monday of this week, we had a massive 439.2 million ounces move into, $439 million, move into SLV. And the ounces you're seeing are basically this over the last 4 weeks. So this is a huge part of that increase into here, which is why we didn't see this frothy of a number until this week, because Monday of this week, people went severely long SLV, That is huge. And if you want to look at the 3-year chart, this is silver squeeze right here. These 3 days these 2 days are silver squeeze. This is silver squeeze, which caused a massive jump in price to silver to around 30. We don't have quite the same level of silver investment into SLV. So this is not, it's only about a third. So we're about a third already of what silver squeeze was back 2 years ago. So it's not quite the same level, but you can see this has been the highest level since silver squeeze. No other period of time have we seen SLV in the last 2 years add as much investment in one day as we have of Monday this week, dating back to silver squeeze. So again, this is a substantive change over the flows in SLV over the last 2 years that needs to be looked at. It's pretty serious. Now, what is the rest of the market doing? We're going to go to the CFTC COT report. This is the commitment of traders. This is a big, nasty, ugly, scary looking chart to some people, but it's just a table of numbers. And trust me, as a former auditor, it's not too bad. And I'll explain how it works. If you've never seen this before, if you come to the weekly market wrap, I'll read it out every week and explain to you how it works. First or second time you look at it, you'll get it. It won't be scary anymore, and you'll be able to read this yourself. In fact, you will find yourself every week hitting cftc.gov, looking at the COT report and saying, are you refreshing? Are you refreshing? Because once you know the importance of this, you're going to be like, oh man, I need to follow what's going on there, because that tells you where the market's going. Now, this data is in arrears. It's as of January 17, 2023. It's 10 days old. About every week to 10 days, the CFTC prints this report, but it's in arrears. It's backward looking. So this is going to tell you why, silver and gold have gone up or down over the past week, but it really informs us as to positioning and what's likely to happen. So, we're looking at silver here on the COMEX. And the biggest thing that I see really is just a reduction of shorts and going along by managed money. Managed money for about 3,200 contracts is net going long. So they're adding long position to silver, getting frothy, saying we want to go into silver. The other reportables are opposite. They dropped 546 longs and went a little bit more short. Positioning from the swap dealers is about even. You had long and short almost identical. You saw a massive amount of $2,500 shorts in the producer merchant category, which is perfectly understandable. This category is the non-speculative category of the COT report. It is the hedging. And why does that make any difference in the world? Because the producers who pull it out of the ground need higher silver and need as high a silver price as they can get to maximize their profit and pay costs. So if they feel that silver market's going to move one way or the other, they'll buy a corresponding derivative position on the market to protect their price risk. That paper trade can be sold and recover the profit to offset the loss they actually had in the physical market when they went to sell. So for example, if you're a producer, let's say silver right now, we have it trading at 23.57 and the producers think that it's going to fall to 22 bucks. They'll add shorts on the derivative market. And if they sell it at 22 bucks, their theoretical loss was almost $2 on the silver price. They'll offset that with a short position on COMEX. They'll cash that in and they'll be made almost whole. So think of this column as an insurance policy against price movements in the actual metal. The rest of this, all these other positions here, that's just speculation. They're just playing the paper for the most part. Now, there are some physical deliveries involved in here, but mostly it's a paper trade. Moving on to gold, we see a massive movement in gold. The swap dealers went net short by over 8,000 contracts, 8,200 it looks like. The producer merchants went long about 4,000. You see the other reportables, the family offices and the wealthy individuals going net short about 4,800 contracts. They dropped a bunch of longs and went short. And so what they're seeing is a little bit of weakness in gold, and that's why gold has faded a little bit. This data determines price. You can see that gold is going to be fading just a little bit, but the managed money, the financial types, the broker dealers, the financial houses, the hedge funds, and all those guys went massively long gold. And that's why you saw so much support for gold. The financial types are going into gold. We had articles this week and videos this week talking about Jim Cramer and him making a bullish call on gold, and me coming out last night on my channel saying, I believe that we're in a gold bull market. Now, I do think that there's going to be an intermediate term pullback because the gold got really frothy. And I think as it approaches its next target on the Fibonacci chart I provided to you guys a bunch of times, or a technical trading chart, I expect it to bounce off of the next important trading level. And that's explained in those videos what that means, and probably come back down and maybe move sideways for a little while. But longer term, I think that we are in a big gold bull market. And I think the managed money or the financial types believe the same thing. That was just action packed. There is so much going on, guys. The economy is deflating as determined by almost every single metric. People are going to safety. We saw massive inflows into SLV. SLV is an ETF. It's a passive fund. So when money goes in SLV, it's coming out of other qualified investments or other major market investments like 401ks, bond markets, things like that. People are moving into SLV using passive vehicles, passive funds. And so that tells you it's risk off. People don't want to take risk. They're not going to be in risk. They're moving to safety.